Hey guys, what's going on? This is Leo. Once again, not financial advice, not a financial advisor. Okay, so going and kind of picking up from where we left off yesterday, we had three possible counts for completing the ending diagonal. One of them has been eliminated, and that was that this was an A. We put in a B, because if y'all remember yesterday, I had this trend line drawn like this. And so the B here, or proposed B, was just hanging out on that trend line. But now that it's gone up more, that count is now invalidated. So really there's two counts. One I'm liking a lot more than the other. And then one is a little bit more bearish. So something that I did miss originally, and I do make mistakes, all traders miss things, was that we actually did get a spike in volume here. Let me see if I can find it. I think it was in the 1 hour that I had seen it. Is that it? Okay, so just looking here. Now, one of the properties of an ending diagonal is that you see as the diagonal contracts, right, as it gets tighter and tighter, volume decreases across the diagonal. And one of the telltale signs that you've completed it is that on the fifth leg, you will see a spike in volume. And because I probably need to change these colors on my volume, but as you can see here, we actually did get a spike in volume at the end of that ending diagonal. So that's quite exciting if this is completed. I still don't like it because there's something in Elliott Wave called the right look, and when something just doesn't look right, it probably isn't. But nonetheless, it's technically possible. It's just a very steep ABC, because right now what this looks like is just an impulse wave down, right? Impulse waves look like this, right? They're very sharp. They're the direction of the trend, right? So for example, on the bigger time frame, you can look out here. This is very clearly an impulsive wave to the bullish side, impulsive move up, whereas this is very slow, very choppy, uh, sideways corrective in nature. So that tells us, the trend is going up. Now we're in a correction. So in a ending diagonal, what you want to see is, the ABC for each leg. So ABC into the 2, ABC into the 3, ABC into the 4, which is why I originally had that trend line drawn this way. But I've broken it down, and you actually can get an ABC count out of the subdivision of this fifth leg. It's just very sharp. So the other possibility is that we haven't put in the fourth leg yet of the ending diagonal, which would mean that would be the 4, and we would be looking for another leg to come down. So I don't really like that as much. An argument could be made that the volume is still decreasing if we start from here and we draw it like this, right? So now the volume, we didn't really get that volume spike, and that volume spike is a little bit of a stretch. It's very slight. I would want to see more of a volume spike. But nonetheless, it's still a possibility that we've completed the correction with this fifth leg. But what I want to keep my eye on is whether we come down for a fifth. If you remember from yesterday's video, I was talking about the algorithms that these computers trade, and how if we did come up for a fourth, that we would likely be coming up to this price level here. And most likely retracement for a fourth wave on an ending diagonal is between the 50 and the 618. And I believe I mentioned in the last video that because of this low volume node here, I was expecting rejection, or at least it to hold at the very least. We also have this pitchfork parallel here that's been holding prices very neatly. So that's interesting. It doesn't mean that we're going to turn down. What it means is that you expect a reaction there. This is an area where scalpers will go in and they'll take out a small profit and be done. But what's going to be the telltale sign is if we break down, right? If we break down from here, it's going to be much more likely that we haven't put in the ending diagonal, and we're going to be putting in a fifth wave. So you look for an A, B, C pattern down. I also mentioned, I believe, that when looking for the fourth wave, you would want to measure out and look for the 100% extension of your first wave. In this case, I don't believe this is an ABC. What I think this is a WXY. So what that means is you have two uh, zigzags back to back, with one being a failure. So if you can see this, you have an A, B, C, and then we get the failure, and now it's put in some sort of a, I'd have to break down the subdivision here, but some sort of a corrective leg for the WXY, for the Y leg. But what's important is that the most likely relationship between the W and the Y legs are going to be 100%. So if we measure from here for the first leg, we get the pullback, so we project from there 100% right there. And so this is what you look for as a trader, is you look for confluence. So we have a 100% projection, right? We have low volume node that we just talked about. We have the 50, where we know that those computer algorithms that institutions use are going to engage. They're going to begin selling. And you know what? Let's go ahead and break that into that, because I'm sure this is going to shut up anybody that keeps telling me that, oh, you can't, this is a manipulated market. You can't track, you don't know what's going on in the market. Well, just like I've been telling y'all how these computer algorithms trade, they start buying at the 50, they continue to buy down to the 618, and they target at the negative 236. Well, let's just start here from the low, shall we? So pulling up, oh, what did it do? Went right to the 50. Interesting. Oh, they got their target, negative 236. Well, now what the computers are going to do is they're going to pull from where they bought previously. They're going to pull to their new high, and let's just see. Oh, look at that. It went to the 618. Interesting. Oh, look at that. It went to the negative 236. That's funny. Gosh, technical analysis really doesn't work. So they're going to start from here, right? Now, keep in mind, these function, like I've said before, there's smaller ones within bigger ones. So you have, someone's going to be trading that on the smaller degree. These computer algorithms, I mean, they break down all the way to the microseconds. It's an unbelievable whenever you dig into it. But so just pull up right there. Huh? What do you know? 618 target. Interesting. Let's see what happens here. I don't know. Oh, look at that. Right to the 50. Wow. Oh, you see where it stopped there? Go ahead and take a look over here. You see that low volume node, lack of price acceptance? That's why they front runned it. So they front run that 50 just a little bit because there's a low volume node over there on the right. So that's basically saying there's lack of price acceptance, so it's likely to reject. And look at that rejection that you get. Interesting. Interesting how that works when you actually know what these institutions are doing behind the scenes. Oh, look at that. Went right to the 618. Now, so the tell here, now it's broken, but that's 618 by quite a bit. It's broken it a little bit here, but more so on this one. So what that tells me, typically what they're going to do whenever you get a significant break like that of your golden zone, is that now the computer algorithms are going to begin to flip, and uh, they'll begin to sell the 50. So as you notice, we're running into resistance there. So there are some algorithms that have begun to sold. Doesn't mean that they will go down and get it. I've seen, especially in crypto, you can actually have quite a big wick through, and they won't flip, if that makes sense. It depends, because whenever, with the way these computer softwares work, it's not like you can go to Walmart and buy a name brand of I don't know, cornflakes, right? And all these institutions use cornflakes to trade. No, they program it themselves, and they have different protocols and different little nuances in between the institutions. So, for example, one of them, even though here we've broken through it by a wick, we've broken the 618 golden zone, doesn't necessarily mean they've stopped themselves out. What they might do is they might stop themselves out if the candle body closes. So I'm going to go ahead and zoom in here, and it just depends. I mean, there's so many different algorithms that trade this method. So for example, this is your candle body, these are the wicks. So some of them are programmed to where if the candle body closes below, then they will close the position. So it just depends. So it may or may not have flipped. Couldn't break out there. But you can see that algorithmic, very methodical moves up. This is how the institutions trade, and so the way you make money is by hopping on the back of these big funds and riding it up with them, not trying to fight against them. I'm not saying we shouldn't be fighting against the hedge funds like Citadel. What I'm saying is just in general, if you look and you play around with these algorithms, that it occurs across all markets, right? So if you're able to identify a trend, you don't want to be trading counter trend. That's the number one mistake that traders make is they try to pick tops and bottoms and they get screwed every single time. If this thing is going down, 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 why would you buy? If you're trading here, right? Let's say you got some sort of a channel working down like, oh, why is it screwed up like that? So let's say you've got some sort of a channel working down, right? Why would you try buying there when you haven't even broken your trend line? You haven't broken a higher low or anything like that. That's what traders make these big mistakes on. Uh, you want to see a shift. So for example, here on the bigger time frame, I'm getting really off topic here, but we talked about how this was the low volume node on the daily, and if you notice how you're running into support here, and we're having trouble getting below that. Well, if you think rather than just putting a blind order there and thinking that okay, well I'm just going to put my order there, and then you end up getting stopped out, what you would want to do is if you come down in here, you see this move down, you see this move down. There's your swing, right? So you want to see that swing break because that's going to be the first indication of a trend change. Well, then what I'm going to do is I'm going to pull up I'm going to track the algo, right? So I'm going to be buying that 50 because I noticed the trend change, right? I've got reasonable support down here. And maybe I've got some sort of LNLE account that's supporting it, but you would buy that 50, right? So you would look for the first pullback into that larger trend. Anyway, so before I get too off topic, essentially what I'd be looking for here is I'd be looking for it to move down. If we're able to get above it and get a significant move, then I would argue that the ending diagonal has completed. We are off to new highs, but I want to see something. Let me see. There's so many tools here. I've been using this for years and years, and I always forget what they are. Where's the polygon? There it is. What you want to see is you want to see a break, right? You want to see a significant break out of this range. It would be a break out of this Andrews pitchfork, which you can see has been holding prices very neatly. You can see how it came down here, touch, get rejection. Kind of one of the other rules with Andrews pitchfork is this middle line here. It's called your median line. You'll often see either a pivot at the median line or you'll see it'll chop around it. And so you can get some chop here. You can see how it came back and touched it here. So you want to look for whatever pitchfork is holding prices neatly, where the price is respecting it. So for example, if you come on here and you put on, let's go with original, that's not really holding prices. I mean, you can see that, right? Prices are doing something different. You put that one on, now it's holding prices. So that's what you want to look for. And what was I saying before that? Oh, so you want to see, what I'm going to be looking for is I want to see a break up high, right? And then we're going to need a pullback for some sort of a two wave, and then we're going to be launching into our larger count. Otherwise, what we would be looking for if it's going to go down would be rejection. So I'd want to see it breaking below these EMAs. So let's say something like that, right? And then we put in our final fifth leg for this ending diagonal, and we would be done. And then we would get an impulse wave out. If you want to know how to trade this structure, you can go back to my video that I did yesterday. I talked about how I trade ending diagonals. I'm not trading this. I bought in the single digits, and it's somewhere around $10. I forget exactly what it was, but I'm just holding. I'm not trading any of this, but it's helpful to structure the price action to get an idea of where we are. It reduces anxiety for traders if they're looking at a map of where prices are going and where they could be going, rather than just blindly investing and saying, well, I think it's going to go up. If you're driving, well, I'm going to try to go to New York City. I'm in Texas. Now, I'm just going to hop in my car and go. Let's hope that I get there. Not having a clue, no maps, no GPS. Well, if you organize your price action and look at technical analysis, it can give you a little bit of comfort in having an idea of where we're going. So it's kind of why I like Elliott waves. It gives you a structured map of what's happening, and as you eliminate counts that are less likely, you have higher probability of being correct. And then once you have a high probability count, then you look for your setups after, like I talked about in yesterday's video. All right, so I think I've babbled for enough for today. This is Leo signing off. Please like the video, and I'll talk to y'all soon.